Hello and good morning, listeners. Welcome back to Almus Market Mornings on this auspicious day of Diwali with Jayaram Krishnamurthy. Now, there are indeed a few fireworks in the name of data points yesterday, and JK, the results were somewhat similar to what you mentioned yesterday. It was bang on with respect to the euro expectations. There was good GDP numbers by Europe and slightly lower than expected GDP numbers for US. Even German inflation was picking up, and so does the layoffs in the US. Now, there are too many updates, so I'd request you to make it easier for us and suggest what should we be expecting out of markets, JK.
Yeah, good morning, uh, Shikhar, and happy Diwali to all of you. Uh, yes, after some lull period, we had a very busy day yesterday in terms of economic data, and obviously, market looks more towards Europe and US because US, of course, is the center of attraction, not only because of the economic numbers, key economic numbers, but also because the election that is ahead. And in terms of the data, again, the GDP numbers came very strong yesterday, and that was much higher than what the market was expecting. No impact of the hurricane or the strike at the ports or in the Boeing, so possibly indicating that the monthly job numbers on Friday could also be better than what the market has been forecasting at 113,000. But we have seen many times the ADP numbers and the monthly jobs number do not really go in the same direction. So we'll wait and see. In any case, tomorrow's number will be very difficult to analyze on the face of it. We'll have to go into the details. Apart from the ADP numbers, we also had the GDP number from US that was slightly weaker at 2.8%, as you said. 3% was what was expected. I think what is contributed to it is the exports coming off. Although we did have the government spending was higher, and then the consumption was also strong. Overall, it's not a bad number because if you compare with other major economies, like nearest what's coming is the Eurozone, which is at 1.5% annualized, even if you take the latest number from Eurozone. US economy is still doing better. Job market is giving mixed trends. Tomorrow's number will be one more to chew upon. Today, of course, we'll also have the weekly jobless claims. On the Eurozone, there was a bit of a surprise. GDP number from Germany came 0.2% plus versus minus 0.1 expected, avoiding another technical recession. But the key point is the previous month's contraction was worsened to minus 0.3% from minus 0.1%. Eurozone as a whole grew 0.4% from 0.2% that was expected. Yes, there has been some improvement, no doubt, because we have seen the IFO survey and also the GfK surveys coming better. The Spanish growth has been quite impressive. France is, as expected. Italy was a drag. So it's a kind of mixed picture, but not as bad as, it has been expected to be in Europe. In fact, one more development is that the disinflationary trend that was seen last month of inflation falling to 1.6% in Germany has come back to 2%, the target of ECB. In fact, on a harmonized basis, the annualized inflation is 2.4%. I think none of these actually, according to me, push ECB towards a 0.5% cut. I think they will stick with the 0.25%, strengthens the argument by Lagarde about the having to go by data. Of course, we did have other members of the ECB saying that gradual approach to removing policy restriction remains appropriate and no need to go below neutral. So that's some argument that some people have been putting forward, and very clearly. So some sort of a moderation in the expectation. One more news about Europe. which could be, again a challenge is that China is also putting some sort of restrictions on Europe in response to their own, tariffs on China. So, like the authorities say that automakers from China should pause investing in EU countries that voted for additional EV tariffs. So, Eurozone's challenges are not going to go away. We have a Eurogroup meeting in Brazil starting today. Some of the key decisions about the future prospects of the Eurozone growth will be taken, including the decision on Eurobond issue also. UK, we had the budget presented by the new finance minister, the Labour government, and it was a higher borrowing, higher deficit, but taxes not as bad as expected. I think the market has received it with calmness, but then the growth for which they are said to be allocating is the long-term growth, and no immediate impact on growth, positive impact on growth is seen. So that's something the market is looking at. It's been neutral for sterling so far, which is trading slightly below 1.30. Overall, on the currencies, euro improved. I would say a combination of month-end buying euro, which usually happens, and also some better data. But I'm not sure whether it sustains. I don't think it goes much beyond 1.09, at least ahead of the US elections. GBP range bond yen, is not, really making any headway, or rather, not breaking that 154, not even sustaining below 153. So it's a range bound market as far as yen is concerned. Now, coming to our own rupee. The month of October has been unique in the sense that we have seen one of the narrowest monthly ranges of 30 paisa. And then this the last range, low range that was seen was in February 24 at 29.5 paisa. In fact, if you count from 18th of this month, we have traded in less than 4 paisa range, like from 18th of October till 30th. We are traded in a 4 paisa range, almost giving a sense that it's a pegged currency. But compare this with dollar index that has moved 4%, EM currency index that has dropped by 5.5%. And significantly is also the month in which we have seen the largest FII outflow of 11.7 billion till yesterday, with no significant trigger locally or globally coming out. So it's rupee is definitely an enigma, but all said and done, it's being managed, by RBI in order to see that there is no excess volatility, but it's too much constrained. I think market is almost getting complacent that central bank is managing the risk, and that's where the risk lies. Because at some point, if there were to be unexpected events like much larger dollar flows or dollar index moving beyond 107 or 100, then or Chinese yuan moving to 7.28 or 6.95. Some of these, larger moves in the global market can suddenly see the rupee also moving, and central bank may not be okay with rupee remaining at the same level. Still a long way away, according to me, from seeing any meaningful move in the rupee. Passage of the month, I don't think it's going to make any difference, because we are into a week of important decision on rates and also the elections in the US. Once again, wishing you all the happy Diwali and season's greetings. We'll come back to you and speak to you on Monday. Thank you.
That was really great, JK, and quite helpful. And yes, folks, we have seen, as JK mentioned, one of the narrowest monthly range for USD/INR. Even though there were moves such as 4% for DXY, 5.5% for EM currencies, and it was one of the largest outflows in the recent months that we've seen when it comes to financial markets on the Indian front. So yes, it can tell how narrow and relatively strong the Indian currency was managed by the central bank. And if we have to talk about anything else on the update front, yes, the ADP numbers were really strong. And whether the NFP numbers or the jobs number will be similar with no effect of the hurricane, it needs to be seen on this Friday. But overall, the GDP numbers were, uh, although slightly lower than expected, but on the good side for the US economy. As DK also mentioned, that the surprise was from the German side. Although Italy was a drag and France did well, but overall, the Eurozone GDP numbers were better than the expectation. So it saw some sort of disinflationary trend in the inflation as well, where it was kind of a pause on the disinflationary trend, and German inflation started rising again. On the geopolitics front, we also saw China putting in restrictions on the Eurozone, asking its automakers to stop investing in the European region. But overall, it needs to be seen how this whole geopolitical and trade tariff matters proceed post the US elections as well. On the UK front, the budget was received very well by the market participants. Rather, it was quite calm, and hence the sterling remained in a narrow rather ranged manner in the action yesterday. So it's about time we start seeing the other sorts of fireworks come into play, which will have to be observed next week. That's it for today, folks. And before signing off, we from Almas will be wanting you to have a very happy Diwali, and we wish you have a very happy Diwali. And the next year continues to be as prosperous and as shining as these days of Diwali generally are. So, wishing you all a very happy Diwali, happy New Year. Thank you so much for listening in, and we shall come back again next week with fresh updates.